Hello and welcome to the day ahead. It is Monday, May 2nd. I'm Andrew Gagan. Well, let's catch up where we left off on Friday with another bloodbath at the session on Wall Street. The Dow slammed 900 points on the day. Tech again the lead drag, seeing the Nasdaq post its worst month since 2008, with the S&P posting its biggest monthly slide since the beginning of the pandemic and marked its worst first 4 months of the year since 1939. Stock specifically, Amazon was slaughtered after posting its first loss since 2015, wiping more than $200 billion from its market value. Apple also lower after its disappointed outlook overshadowed record quarterly profit and sales. And hot inflation and the path of policy of the Fed also weighing on investor sentiment. After fresh data showed the Personal Consumption Expenditures Price Index, the Fed's favoured measure of inflation, shot up 0.9% in March after climbing 0.5% in February. All eyes now firmly fixed on this week's FOMC meeting, with the market orbit pricing in a 50 basis point hike from the US Central Bank.
Everything is priced in, the worst possible considerations. I've said this before, and now I'll have to reiterate. I'll get a double down on this nonsense that I sometimes speak, that the worst is possibly priced in with regards to interest rates. The Fed has said what it is they're going to do. Every broker on the street says 50 and then 50 and then 50 and then 100 and then 1,000, and then next thing you know, we're all going to have mortgage rates of 1,000%. Great. That's as worse as possibly get. If J Powell does point to the data and says, look at what just happened, maybe growth isn't there, maybe inflation, because remember, that's all they're trying to do is just keep inflation down. Maybe inflation has peaked and we're going to have a look at the numbers and we're going to wait to see if it actually is peaked. This market will potentially rally phenomenally well because the money will continue to flow into this market, as I've always said.
Well, very different story around the globe, with European markets touching their highest level in a week on Friday on the back of strong earnings and a rally in miners, which boosted risk appetite to end a volatile week dominated by concerns about slowing growth. Getting deeper into those key inflation measures stateside, the headline PCE deflated, rising 6.6% over the year. That is its biggest gain in 40 years. Personal income rising 0.5% in March, slightly above forecast, while spending was up at more than expected 1.1%. The major currencies were mixed against the US dollar. The Aussie falling from highs near 71.8 US cents to lows of 70.6, and it has lost close to 7% of its value over April. The US dollar surging nearly 5% for the month, its largest monthly gain since January 2015. The greenback has benefited from safe haven bids in the midst of the war in Ukraine and higher interest rates. In cryptocurrencies, Bitcoin futures last week posted their largest net long position since the contract was launched in 2018. Bitcoin having stabilised between that $37,000 and $40,000 range, but so far this year Bitcoin has fallen roughly 17% versus the dollar. Let's come back home. Steep falls on Wall Street on Friday expected to push the local share market sharply lower this morning. SPI futures currently off close to 1.3%. Commodities remain in focus, with Brent crude up more than 1.5% to $109 a barrel. Iron ore futures falling almost 3% to $146 a tonne, taking its losses for the week to more than 4.5%. And base metal prices mixed, nickel falling 3.7%. Spot gold was trading near $1,896 an ounce, having regained most of its losses for the past week. Well, quick check on what we're watching this week. And on the corporate calendar, it's all about the banks, with ANZ, Westpac, NAB handing down half-year numbers, with Macquarie handing down full-year results on Friday. Janus Henderson, Block and News Corp also handing down quarterly numbers. And just as far as the Aussie dollar is concerned, it's all about the Reserve Bank. Will they or won't they? At the central bank's interest rate decision, we'll find out tomorrow. And that is your day ahead. See you again Tuesday.